unexpectedly gave the market relief, but technology still lost. Brent fell below $97. The Dow gained nearly 0.5%, yet semiconductors dropped more than 4% and kept the Nasdaq in the red. That split matters because lower energy prices removed one pressure, but investors still rejected open-ended AI spending. Monday's test is whether QQQ can reclaim 692 while chip selling finally slows. The S&P 500 closed at 7,411.98, up 0.05%. The Nasdaq Composite ended at 24,975.82, down 0.64%. The Dow closed at 51,947.25, up 0.46%. The Russell 2000 finished at 2,930, down 0.35%. The ranking is the story. Price-weighted blue chips benefited from oil relief and company-specific strength, while growth and smaller companies remained under pressure. SPY closed at $738.89, up 0.10% on 42.21 million shares. QQQ closed at $684.23, down 1.12% on 40.05 million shares. SPMO closed at $146.57, down 2.18% on 1.47 million shares. Volume reached 81% of its 65-day average in SPY, 94% in QQQ, and 66% in SPMO. The pressure was selective, not a market-wide rush for the exits. Friday removed one risk, but not the other. Brent crude fell more than 4% to $96.78 as traders weighed possible renewed U.S. and Iran talks. The 10-year Treasury yield eased to about 4.68%. Those moves reduced the immediate inflation and discount rate pressure. But semiconductor buyers still refuse to step in. The market wants proof that enormous AI investment will convert into durable free cash flow. Cheaper oil bought time. It did not restore confidence. VIX finished near 18.67, little changed from Thursday. The S&P 500 low was 7,396.53, about 15 points below the close. That combination says the chip sell-off was painful, but the broader tape did not become disorderly. No transparent, time-stamped public after-close gamma model was available at the cutoff. Exact gamma flip, call wall, and put wall levels are omitted. Those values are model estimates derived from options data, not exchange official figures. Intel fell 7.89% despite forecasting quarterly revenue and profit above expectations. The market focused on another 2 years of spending. Monday needs support near $90 and a recovery through 96. Micron lost 6.99% as memory shares absorbed the AI spending backlash. Digital Realty gained 10.90% after raising its full-year funds from operations outlook. SLB rose 11.08% after beating quarterly profit expectations. Apple gained 3.53%. Investors preferred proven cash generation over another promise of future scale. Real estate was the strongest major group. XLRE gained 2.22% as Digital Realty's outlook and lower bond yields supported the sector. Energy's XLE still added 0.40%. SLBTK's earnings strength offset the drag from cheaper crude. Technology's XLK fell 1.44%. The Semiconductor Fund, SOXX, dropped 4.40%. This was not a simple defensive day. Investors bought businesses with visible cash flow and punished the part of technology where spending is rising faster than proof of returns. Monday starts at 8:30 a.m. Eastern with June durable goods orders. The consensus forecast is a 2.1% increase after a 4.5% decline. Baker Hughes discusses results before the open. Amcor Technology reports after the close. Then the week accelerates. The Federal Reserve decides on rates Wednesday. A hold is expected, but futures still assign meaningful risk to a hike. Microsoft, Meta, Amazon, and Apple also report. Their central task is simple: show that our spending can produce revenue and free cash flow fast enough to justify the bill. For the S&P 500, support is 7,397, then 7,350. Resistance is 7,461, then 7,500. For SPY, support is 737.29. Resistance is 743.72. For QQQ, support is 682.48, then 680. Resistance begins near the prior close at 691.96, then 692.63. For SPMO, support is 145.64. Resistance is 149.31. For SOXX, 520 is the next round number defense. View 1, oil relief broadens the rally. Validation requires Brent below $97 and SPY above 743.72. The view fails if Brent returns above $100, while SPY falls below 737.29. View 2, the chip correction continues. Validation requires QQQ below 682.48 and SOXX below 526.68. The view fails if QQQ clears 692.63 and SOXX clears 548. View 3, rotation remains stronger than liquidation. Validation requires XLRE to hold 45.30 and VIX to stay below 20. The view fails if the Russell breaks 2,927, while VIX closes above 20. Friday's lesson is that macro relief can stop a market slide without repairing its weakest trade. Cheaper oil stabilized the Dow and the broader S&P 500, but semiconductors kept falling because the market still doubts the timing and scale of returns on AI infrastructure. Monday's clean repair signal is QQQ above 692 with SOXX above 548. Failure below 682.48 keeps the technology correction active. Data are through the official U.S. regular session close. Main sources are WSJ FactSet, Nasdaq, Reuters, AP, MarketWatch, SIBO, and the Census Bureau. For market research only, not investment advice.